question.
I am
Limited
answering
amount
your
of time, Ambassador. If I ask you to be specific and answer my question. Comments about working towards a bill that all of Americans can take pride in and
Congress has the power, the right, and the obligation to make sure we spend the taxpayers' money wisely.
Hello, I'm Bob Menendez, your United States Senator from New Jersey. Welcome to Report to the People. This program is about bringing you the information you deserve on the issues that impact our state and our nation. Today, we'll be taking a close look at a major financial issue for our families and our economy: credit card debt. In these tough financial times, people are loading their monthly bills onto their credit cards, trying to put the bills off as long as they can. And while the debt is piling up, people in our state and across the country are discovering that their credit card agreements conceal all kinds of trapdoors behind a layer of fine print. If you take one false step, then your credit rating plummets and your interest rate shoots through the roof. New Jerseyans have contacted me after facing sky-high interest rates they never expected, after accepting one offer only to learn later that the terms were written in erasable ink, or after watching in horror as their children in college get swallowed up in debt. For far too many people, credit card debt is already a personal financial crisis. If we don't act soon, it could grow to become a national financial crisis. That's why I've introduced legislation in the United States Senate to end certain practices of credit card issuers while making sure that Americans, young and old, don't so easily fall into financial traps. The Credit Card Reform Act says when a credit card company charges a fee, it should be reasonably tied to the costs a company incurs. It shouldn't just be another way to increase their profits at your expense. The bill would stop companies from raising interest rates on customers who have a perfect record with that credit card but may miss a payment with some other creditor. And it would protect young consumers from credit card solicitations they didn't ask for. The bill is making its way through Congress, and I promise to keep you updated on its progress. In the meantime, we have two guests joining us here today to share their perspectives on credit card reform. Travis Plunkett is the Legislative Director of the Consumer Federation of America and an expert on financial service issues. We're also happy to have Tariq Salib here with us. He is a constituent from East Rutherford who's had firsthand experience dealing with the fallout from a credit card deal that very quickly became a nightmare. And above all, it's great to have you here with us, keeping your eye on the issues that are important to all of us. Now please join us as we report to the people. Thank you both for joining us. We appreciate it.
Thank you,
Mr. Salib, you had a great credit history, and then something happened, and all of a sudden you faced some of the challenges I talked about in the opening. Why don't you tell us your own personal story?
Sure, Senator. First of all, thank you for having me on the program. Basically what happened, I'd fallen over some hard times. My mother got ill, my brother was out of work, and my income had decreased substantially. So over a period of a few months to a year, I built up a lot of debt on my credit card. Had the card for more than 10 years, never had a problem, a good credit rating, and I missed one payment, and basically my rate jumped from 7.99% to 29.99%. And I called the credit card company and tried to...
Jumped 22%.
That's correct. Called them up and tried to work out a payment plan, work out somewhere where I could, I could get the interest reduced, but they said basically you're stuck with that rate for at least 6 months, and then give us a call and we'll see what we can do for you. And at that point I contacted your office, and they were very helpful in intervening, and the credit card company eventually returned the rate to what it was previously.
How long have you had that credit card before?
That particular one, probably more than 10 years.
So 10 years of a great record, one payment late once, and all of a sudden we go and have a 22% increase.
Yes, there was the increase, plus they hit me with a late fee, and because I was near the upper limit of my credit with the late fee and the new interest, it put me over the limit. So then I got hit with an over-the-limit charge on top of it. So yeah.
In addition?
In addition, that's correct.
Did you ever think that that was part of your credit card agreement?
No, not at all.
Yeah. Travis, what's that sound like? Sound like an uncommon or a common misfortune?
Unfortunately, we're hearing this story from many people like Mr. Salib all over the country. It's become very common in recent years for credit card companies to use tripwires for people who've had a good relationship with their credit card company to suddenly and unexpectedly increase their interest rate. What a 29% interest rate does to your minimum balance, depending on how much you owe, is a lot. Your balance could double or triple or quadruple overnight. A lot of people simply don't have the room in their budget to afford that.
And so, how many, as the consumer, one of the major consumer advocacy groups in the country, how many people know that these are the provisions of their agreement, would you say?
Most people don't hear about it till after it happens.
Mm-hmm.
And one of the problems is, have you ever tried to read a credit card agreement? We've had contract law attorneys tell us that they can't understand the terms of those agreements.
Mm-hmm.
They're written by lawyers, for lawyers, in legalese, designed to protect the credit card companies from legal liability. It's very difficult for anybody, even people who try to read that small print and plow through, say, 25 or 30 pages to understand what the terms of the agreement is. And then the credit card companies often have a catch-all clause that says, if we haven't covered everything else we might do in these preceding 25 pages, we reserve the right at any time for any reason to increase your fees or interest rates. Now, that is not a fair contract, where the person, in this case the business issuing the contract, has all the power to change the terms of the agreement. It's simply not something that should be allowed.
Yeah. I've received those myself as a credit card holder, and I happen to be an attorney, been a legislator for a while, and just the print,
you've got to get the old magnifying glass out here.
and the number of pages in the print. So as a course of of common practice, most people take that, they take a glance at it, and they put it away. And so even the way in which that is, those changes, and there are sometimes changes, significant changes made in your agreement. I'm sure that you've received along the way. The only thing they're changed because they say there's important changes in your credit card, but then there are pages of incredibly fine print.
Correct. And people often miss the changes, even though they often do say changes on the envelope, because they often get so many envelopes, so much mail from their banks, not just their bill, but products as well. And I know I have inadvertently thrown away changes in terms and even credit cards, renewed credit cards that were sent to me, simply because I get so much mail from my bank that I miss them.
And when you've gotten those changes, have you been able to read through them all?
Oh, absolutely. Very easy.
A brilliant man.
No, basically.
After his experience, he's decided it's going to be tough and I'm going to do it.
No, I do get them pretty regularly. I'd say maybe at least once a year, if not 2 or 3 times a year. I just file them with everything else. I don't even attempt to read them.
And the thing about these changes is they're unilateral. The companies decided to make it. Didn't ask you whether you still accept it. I mean, I guess you can send your credit card back, but for all intents and purposes, it's a unilateral set of changes. Well, let's talk about some of the other practices the industry has. I mentioned it at the opening, something we call universal default. Why don't you explain that to our audience, how that works?
Well, very simply, what that means is that if you have a problem with another creditor, as you mentioned, or even your credit score drops for very minor reasons that have nothing to do with the problem. Some credit card companies reserve the right to increase your interest rate. They say that you're a higher credit risk. We say that what seems to be happening is that they are using this as an excuse to increase interest and therefore their income for people who have been paying on time, who have kept their part of the agreement, who are meeting their obligations, and nonetheless, their interest rate doubles or triples. It's simply not fair. And in these economic times, where some states and some communities are having a harder time with the pending recession, it puts a lot of families in a very precarious financial position, because one day they're paying at 12% and the next day they're paying at 29%. And they simply can't afford it.
And this could be as simple as I might have the 10-year perfect record, as Mr. Salib had, and I might be traveling and come home and pay my utility bill a day or two late, pay it a day or two late, and the credit card company will say, well, you were late on that. That means you're a higher risk, so now your credit card, for which you've had this great history of payment and have done nothing different, will all of a sudden have a new interest rate.
That's right. Your
And
utility bill, library fines. Some libraries are now reporting whether you haven't. Keep your eyes open. Whether you haven't paid your fines or your overdue books on time.
Mm-hmm.
So it could be anything, however accurate or inaccurate, that could cause your credit score to drop, and the credit card company then hits you with a new higher rate.
Now, there are times in which we get solicitations and we're told, here's the platinum card, the card with, no annual fee, the card that has a very low annual percentage rate. You ever receive those?
I still do.
Yeah.
Absolutely.
And then what happens is you apply for them, and the card you get back, it isn't platinum. It's like the bronze card. I call that bait and switch. And one of the things we seek to do in our legislation is to say to a credit card company, well, if you lure me, if your solicitation to me is for the platinum card, and I fill out the form and send it back to you, well, don't send me something that's inferior unless I'm willing to ask for it. I think that's something that we should be able to do in the practice of making sure that there's some transparency here.
That's a very common sense proposal, Senator. It's a very strong proposal. I think most Americans would automatically, and most New Jersey residents would automatically understand, look, give me, if you make an offer, you have to fulfill your pledge. We want a firm offer of credit. Some of the advertising is deceptive. They'll tell you, well, we can give you an interest rate as low as. And then if you can read it, there may be fine print at the bottom saying, depending on your credit worthiness. What your provision would do is say, no, you have to make a real offer of credit to this person based on their credit worthiness. And then if they accept the offer, you have to follow through.
Mm-hmm. Now, let me ask you, when you got that one time late and you got that dramatic increase, and you also had a penalty or late fees, did the amount of those late fees make any rhyme or reason to you as it relates to being late for a day or two? Was it like an appropriate interest rate for a day or two late, or?
It didn't seem like it. It seemed extremely excessive. I mean, I understand there being a penalty or a late fee or even a reasonable increase, but when the rate jumped almost 30%, and then late fees almost, between $100 and $200 in late fees, and all that pushing you over the limit, and then you get hit with another over the limit fee. I mean, it was just fees begetting more fees, basically.
Mm-hmm.
So
that's why I talk about trapdoors.
Right.
Because all of a sudden now you're into a whole host of things that generate a domino effect that push you over. And this is not about consumer responsibility. We believe in consumer responsibility. People have to make good financial choices, but there's a difference between making good financial choices and having a credit card company take advantage of it, because it seems to me that they make far more profit at the end of the day from the universe of all the late fees and penalties and whatnot than they do just by charging the stores a small percent for using the card or having the card be used there. And so one of the things our legislation would do is say there's got to be some rhyme or reason to the fees in relationship to what you're charging, so that in fact if you are late and you're late by a couple of days, well, that doesn't invoke several $100s. That might invoke something like a $30 or $40 fee, because that's the interest rates for those few days as a per diem, let's say. Travis, what do you think about that?
Well, that's one of the most far-reaching and important parts of your proposal. Fees are out of control. The Government Accountability Office looked at this about a year and a half, and they found that the size of the late fees and the over-limit fees and the other fees had increased far faster than the cost of inflation. And so it's not justifiable for the credit card companies to say, hey, we're just keeping up with rising inflation, or that we're merely trying to deter bad behavior, because most people are like Mr. Salib. They understand if they pay late, it may cost them a little bit, and they're willing to pay a reasonable fee. But they're not willing to pay $40 for being a day late or even a few hours late. Some card companies are hitting people with late fees even before the end of the day if they receive a bill before the end of the day. Why? Because they've decided that the bill is due at 1 p.m. instead of at the close of business. And that seems like many people to be another trapdoor.
Mm-hmm. Well, part of our legislation is about establishing a postmark date. And making sure that at the end of the day, if you appropriately postmarked it by that day, that you're in compliance, so to speak, because otherwise, we can have a variable that constantly moves. It's a moving target, and you're not quite sure when you're going to get hit with that late fee. Another issue that's out there, I've heard from so many New Jerseyans, is about the challenge of their sons and daughters in college and getting hit with a bombardment of solicitations by the credit card companies, pre-approved credit, just basically sign up, to young people who are basically full-time students and don't have the wherewithal to go ahead and really pay the credit that they're drawing against. And what happens is sometimes, they have allowances. They'll pay from their allowances. Sometimes they might have a part-time job, a work-study program. But at the end of the day, some of them get caught with having a debt they can't pay. And so one of two things are happening. Do we, parents who want to go ahead and make sure their son and daughter don't start with bad credit in their life, and so they make the sacrifice of paying for it, but it's a sacrifice to them. And then a universe of parents who, I wish I could do that for my son or daughter, but I don't have the money to do that, and hence they default. And now, what's the consequences of that at that age?
Well, think about that. You're starting your professional life with a black mark on your credit record. You may have a hard time not just getting credit, but renting an apartment, or getting a cell phone, or getting insurance, because insurance is now pegged to the credit score as well. So it's a very bad way to begin a professional career, and if the economy continues to slide, it'll be more difficult for college students as well, because they may have a harder time getting a job. So the proposal in your bill merely says that college students should affirmatively agree to receive a credit card solicitation. Some universities actually sell the addresses, the on-campus or the off-campus addresses of students. And this simply says, if they want to receive those solicitations, they can do so, but they have to affirmatively agree to it. Otherwise, they won't be bombarded with the mail solicitations.
Yeah, we call that opting in. And
That's
basically, we just want to make sure that if a young person proactively wants to go and solicit a credit card, they know their responsibilities. But this bombardment, as a matter of fact, when my son and daughter were in college, I actually started keeping the stack of their solicitations, and they were stacks. And I, looked through some of them, and after they opened it up, and I looked through some of them, and I said, well, how could you get a pre-approved credit card when it doesn't? You don't have, the gainful wherewithal to pay it. And this is a huge problem. What are the number of solicitations we have? And not just for young people, but the number's astronomical.
Last year, 5.2 billion solicitations, that's with a B, were mailed out.
To consumers in the
To all
country.
Americans.
To the mail, through a whole host of other processes.
That's correct. It is still the main way that people get a credit card.
Yeah. Now, when you had your experience, just to put another dimension, what did it do to you in terms of, we've heard the financial side of the consequences, having the skyrocketing interest rate, 22% increase, having the late fees, putting over the limits. So it was a series of dominoes and trapdoors that ultimately put you into this very serious predicament. But as someone who had such a good record for so long, How did it affect you?
It was extremely stressful. My concerns were on so many levels. First of all, like you said, the universal default. My concern at that time was that if I couldn't make those payments, then all my other credit would become a problem, and I would just consecutively wouldn't be able to pay it. And I did lose a lot of sleep over it. I did stress tremendously over it, because at the time I was caring for my mother who wasn't well and helping out my brother, and it was a difficult time, and it just compounded on top of that. So it certainly wasn't easy at all.
So do you do you think some of these reforms that we're talking about as a consumer would help you and help fellow New Jerseyans?
Absolutely. Be honest with you, I was kind of surprised that some of these things weren't existing already, because they seem just logical and straightforward and obvious to most people, certainly people I've talked to. So absolutely, they seem very beneficial. It would be great to have those.
Travis, one of the things we're looking at, and maybe you can talk about this a little bit, is that we're seeing an increase in the number of people who are using their credit cards to float their monthly expenses, in essence. You know, many people use a credit card as a convenience, as a way of not necessarily carrying cash or even a check. And of course, they get their bill at the end of the month and they pay it in full, and you know they're not paying any of that interest and whatnot, and so it's a convenience. But increasingly, I know as a member of the Senate Banking Committee, we've begun to receive information, and some hearings. We've heard some witnesses that have said, you know, we're seeing a rise in credit card debt, and combination of some of the factors we've just talked about, that people are paying interest rates that are skyrocketing, but also that people increasingly are not using it as a convenience.
They're using it for necessities. That's a big change. We're hearing stories frightening stories, that people are deciding not to pay their mortgage loan and are keeping their credit card current. The only reason I can think, and that's generally not good to do for a variety of reasons. The only reason I can think that people are doing that is because the credit card has become the way to buy the groceries, the medicine, and pay for doctor's bills, you know, for real necessities. The old days of the credit card being, for some families at least, merely a convenience are gone. And therefore, the implications of this high level of credit card debt are more significant. We have about $850 billion in credit card debt in this country, but it's not evenly distributed. About 50 million.
$850 billion
Yeah.
of collective credit card
Yeah.
debt in families. As a matter of fact, the average for families has been going up.
It has. If you look at just the people who have credit cards and carry over the balance, as you're talking about, these are folks who don't pay their bill every month. They revolve their bill. The average debt is about $17,000 per household. And the number of people who are falling behind on their payments is increasing pretty sharply. Credit card companies are writing off more debt. Those are bad signs. That means that an increasing number of people are having a hard time affording their debt and may end up in default or even in bankruptcy. And bankruptcies are rising too.
And so when you carry over your debt, and as you described, it's a revolving amount, that's when the interest rates begin to click in.
That's right.
And of course, that means that the amount you owe continues to grow.
Yes.
The less you pay it down, you know, and those interest rates continue to rise, then your debt continues to grow, and that has some of the challenges of growing to a point that people may not be able to keep up with it.
That's right. And then your family gets hit with a situation like Mr. Salib has been dealing with. And so maybe your debt load has been growing, and then something happens. A family member gets ill, you maybe you're a little late on a payment, and one of these trap doors opens. And all of a sudden, what was a tough situation to begin with has become impossible to deal with.
Now, we have several federal regulatory agencies that particularly have some power already to be looking at this. You know, some people say, well, why do we need legislation? But we haven't quite seen these agencies be as robust in using their powers, have we?
No, I'd say it a little more strongly, because we have tried to work with the federal regulatory agencies for a number of years. they have not protected consumers. They have refused until very recently to take steps to eliminate some of these abuses, and clearly they have the power to do so. Finally, we're seeing some changes. The Federal Reserve last year proposed giving people better information about their credit cards, which doesn't solve the problem, but it's a start. And now we're expecting the Federal Reserve in the next few days to offer some proposals, and we'll see how effective they will be to deal with some of these abuses. And it's been 5 years of people like me and many others and members of Congress saying, you all should be paying attention to these problems. The credit card companies aren't treating their customers well.
And you know, this is similar to a year ago last March at a banking hearing on a somewhat different subject matter. I said to representatives of the federal regulators as well as the administration, we are going to have a tsunami, my words, of foreclosures in the subprime market. And I was told then that was somewhat of an over-exaggeration, and I said, I hope you're right and we're wrong.
Well,
At the end of the day, unfortunately, we haven't even seen the crest of that tsunami take place. And it seems to me, and one of the problems was that our regulators were behind the curve. Instead of being the ones to prevent excesses from taking place, so that you wouldn't face the type of consequences you faced. On the contrary, we have them come in as the cleanup brigade. And then it's too late. The consequences both to families and individuals are there. And it seems to me that this credit card issue, as we just discussed, this rising debt of American families with more debt, that this is in fact a significant opportunity for the regulatory agencies to hopefully be ahead of the curve instead of behind it. They're already behind, but we could catch up somewhat. And what they don't do, we'll try to do legislatively.
On the mortgage problem, they completely failed. They can't catch up at this point. The problem has been tossed in your lap, in the lap of Congress. On credit cards, there's still a chance. Some of the warning signs are the same as we were seeing with mortgage loans a couple of years ago. The number of people who are falling behind are increasing. The amount of debt they have is increasing. The problems are increasing. They can still act, but it's getting to be, five minutes, to midnight, and they've got to move soon.
Well, on that note, I want to thank both of you for joining us, and we thank all of you for watching us as we continue to report to the people.